welcome to this edition of the Entrepreneurship Through Acquisition podcast, brought to you by the Polsky Center for Entrepreneurship at the University of Chicago Booth School of Business. I'm Brian O'Connor, adjunct professor of entrepreneurship at Chicago Booth, and joining me today is John Schoaf, CEO of FMT Solutions. Thanks for joining, John.
Absolutely. Thanks for having me.
Yeah, we appreciate you taking time out of your day.
Absolutely.
So I think what we would like to start is just understanding a little bit about your background and how it might have led you to this path of entrepreneurship through acquisition and search fund investing.
Sure. Well, I've been an entrepreneur from a young age. I'd actually had a unique opportunity where I bought my first company at age 15. Like many people, start out in the lawn care and landscaping business. I'd grown that into a facilities maintenance business through high school and college. So just had that taste of entrepreneurship and taste of being a business owner. Spent the next few years of my career in the investment banking industry, working with a lot of these small middle market business owners and helping them through the exit process. And just really had that taste of eventually wanting to get back to that point of being a business owner. Spent some time at Columbia Business School for my MBA, and then afterwards spent several years at the Axial Network, helping to build out a community of people buying and selling businesses. So just had a lot of exposure to the M&A and business owner community, and just really felt like it was time to get back to running my own business again. Very
interesting. So you were an entrepreneur operator at the age of 15. Do you view yourself, John, as more of an investor or an operator or an entrepreneur, an idea person? I mean, what is it that sort of, you clearly have it in your DNA.
Yeah.
And so what is it about the model that has sort of drawn you in?
Yeah, well, I would say, a while ago somebody told me this words of advice that you're either an operator, an investor, or an advisor. And I guess I've been fortunate to really have all three of those hats throughout my career. And I'd say one of the transitions from shifting from an operator to the search fund model and really acquiring a business through acquisition is really looking at it from an investor's perspective, right? And I've got some investment partners that I've brought on board through my personal investment vehicle, and really had a chance to think a lot more like an investor and looking at an acquisition like an investor. Then really wearing the CEO hat back on the entrepreneur is really thinking about the CEO role as an investor of allocating capital within the business and growing a business. So I think over time, really looking at growing that business from an investment perspective, I think it's just a different perspective than many just entrepreneurs will have.
Sure, great. And so there are many ways that you might have decided to pursue a path toward buying and running your own small business. Why was it that you sort of decided to pursue the search fund model? I'm assuming that you learned of the model and studied it at Columbia. Mm-hmm. What was it that drove you toward that model versus maybe some of the other avenues that might be out there?
Yeah, well, I think there's a lot of different ways. If I ask myself, if I want to go find to be CEO and be running a company, there's a couple ways to do it, right? One is starting it, and I've been involved in a few startups in the past, just ready for something to take to the next level. But there's other ways to finance the acquisition itself, right? Whether I'm looking at finding something a little bit smaller and doing it on my own, finding a single private equity firm or family office to partner with. What I really liked about this model is having a diversified group of investors that ultimately can bring ideas and perspective to the table that I can really pull on from an advisor mentor perspective. The other advantage is just, after having a diversified group of investors, I'll end up still being one of the largest shareholders. And being able to still feel like I've got that control. I invested in the company that I acquired, which is different than I know many other people do.
Sure.
And also investing in other searchers. So really just trying to look at it from a community perspective, which is what brings me here, and sharing my experience with other people.
Yeah, well, we appreciate you doing it. So those investors and advisors that you assembled, how has that played out sort of during your search? That obviously was your source of capital for chasing down deal flow, and now you've made the acquisition. How have you drawn on that community, and where have you sort of picked your spots to bring in post-acquisition, maybe formed your board of advisors, board of directors? Talk a little bit about that community and sort of drawing on it for assistance and mentorship and guidance post-acquisition.
Yeah, absolutely. I would say the first step is really pulling together a board of directors. Even though I've got more investors than I have board members, it's really just the selection process of finding people that I really work closely with at the initial stages, then I also felt had some real value add to the specific company. So one of my investors is also invest in another company in the industry, non-competitive, but allows us to have some sharing of ideas and best practices.
Great. Yeah, great. Now, and maybe just for the people who are watching and listening that don't have as much experience in constructing that board of advisors and board of directors from that community, what does it actually sort of tangibly look like? How many members? How do you sort of interact with them? What's the cadence of communication, the frequency of meeting? Maybe just give us a little bit of tangible example on that.
Absolutely. So I've got, I guess, 4 formal members on the board, of which I'm one. So 2 of the others are more from investor perspective. So they've got a lot of time sitting on other boards, holding CEOs accountable and making sure that they're doing everything that they need to do. One of the other board members is a former CEO and operator as well. So he's just got a lot of operating experience and being able to really see it from the CEO's perspective. I've also got one of their informal board advisor. It's basically an observer. Yep. That's also got an operating background and has built several companies. And just that really adds to the dynamic.
Tell us about your business. I'd love to hear about FMT and what you guys are doing, and we'll sort of get to this, but how you found it, what drew you to the model.
Sure.
I'd love to get a little bit more information on your business that you run.
Yeah, so FMT really started out as a publishing business, so publishing financial education materials that they'd sell to investment advisors when they're going to do some type of seminar or educational type of an event. Over the years, the business has really evolved into a marketing services firm, where we'll do the marketing to attract the attendees to the classroom. So really, rather than just a traditional seminar business, it's really an educational marketing system. So the advisors will really come in a little bit like a franchise. So they're going to receive all the training on how to teach the classes. They're going to get the marketing on how to, we're going to do the marketing to fill the room with attendees, and then we're also going to provide all the course materials that they need to teach the class.
Great. So it sounds like an interesting business. What were some of the key, if you could maybe boil it down to the 3 things or 5 things during your diligence process that sort of said, made you say, this is the right business for me, this is the right business from a growth standpoint, from an attractiveness of potential returns for myself and my investors? What was give us the core sort of tenets of the thesis.
Yeah, well, I'd say there's the initial sort of screening. It's got to hit sort of all the basics, right, in terms of just being the right size, sort of the right economics from an investment perspective. But there's a lot of businesses that could fit that mold. So one of the things that I really, when I saw FMT Solutions, just said, hey, this is really the right business for me, right? And I'd spent a lot of my career in the financial services industry. I spent a lot of time in firms that provide marketing services for financial service providers. This was a bit different of a segment of the market than I've played in. I've mostly been on the business-to-business side and institutional capital. And this is more on the retail side of working with individuals and retirement planning. So it was enough of a challenge that I said, hey, this is something that I can continue to learn, develop my experience in the industry. And just felt like something I could really add a lot of value to the team and really be able to help the business.
But you did feel like your background in this space was a benefit to you, not having sort of come into the industry flat-footed or into this business model flat-footed, if I can understand what you're saying correctly.
Yeah, absolutely. I think there's some things that I've got some experience in the industry that have been helpful, but there's definitely a lot of new things that I've had to learn as well. So absolutely, it's a different beast than I've come from, so sure. Getting up to speed and learning the industry.
Well, we want to hear about getting up to speed, learning the industry, the early days of your running FMT. Before we go there, maybe a bit on how you found the business and sort of the effort that you went through that I stayed close with as you were searching.
Sure.
To find a great target.
Yeah. Well, I'd say there's a couple different approaches to it, and often people talk about the proprietary process of reaching out and cold calling business owners and seeing if they're interested in selling their business. And then you've got more of an opportunistic approach, which is through various types of advisors and intermediaries that are already working with various sellers. So I was sort of running 2 different horses. I felt like I had a lot of background in the M&A industry. I had a large network in the community. I've probably called on every single mid-market M&A advisor in the country at some point. But I really still felt like I owed it to myself to spend that time reaching out directly to business owners, having those conversations. Spent a lot of time in sales and prospecting. So it really is very much of a sales process, right? It's building a list, it's calling the list, it's getting rejected 95 times. 4 out of those other 5 times that they do take your call, it doesn't go anywhere. Yeah. And it's really just waiting for that one thing that can end up leading somewhere.
Yep. And so specifically with FMT, maybe walk us through sort of how you unearthed that one.
Yeah. So that one I'd been a member of the Axial Network since I joined. Fortunately, helping to build the Axial Network gave me a little bit of insight there.
You know a little something about the tool.
1 or 2 things. But this was one that actually came through, and I had one of the initial interns on my team was helping to just do some initial pre-vetting and screening. When I first saw it, I actually said, no, this one sounds too shady. I don't know, something about the way the advisor sort of created the description. It was just a little bit of initial turnoff. But then he came back and said, no, John, it sort of checks the box of all the things that you're looking for. So I said, okay, let me have a conversation. So I reached out to the intermediary. And one of the things that I always really look for is what type of intermediary am I dealing with, right? Is it somebody who's running a really broad auction and shopping it and, you know, have a really firm type process? Or is it somebody who's really just motivated to help the seller find a good buyer? And I guess I just recognized it was that type of a person and really wanted to pursue it from there.
Clearly, the job of the intermediary is to do a number of things: manage a process, likely maximize value for their client. And so in doing so, they're going to be having conversations with multiple suitors. How did you differentiate and position yourself vis-a-vis other potential suitors for this business?
Yeah, well, I think it's really just coming down to understanding what the owner's looking to accomplish, right? And some owners, when they're looking to sell, they're just wanting to, you know, they'd love to see their company get bought by a Fortune 500 company because that's going to give them a lot of pride and a lot of, you know, bragging rights on the golf course. Other people just say, hey, I'd really like to make sure that my company stays intact, and I'd like to see the company continue along its existing path with some fresh energy, right? And the sellers that I was working with were looking to retire. They had been in the retirement planning industry and they ate their own dog food, and they said, you know, we're ready to get to that point where we retire ourselves. And they were really looking for somebody like me that could help continue the company to grow and not try to take two businesses and smash them together, or roll it up, or move locations. It was really important that their employees, you know, stayed in their positions and the company really continued doing what it was doing.
Understanding the motivations of a seller and trying to create a solution and a structure and an economic proposition to that seller that might solve their unique needs.
Yeah, absolutely.
Yeah, that's great. Any challenges that you faced when trying to structure and close the transaction?
You know, I'd say fortunately it was probably one of the more clean transactions I've seen. I spent a lot of time in the industry and hear a lot of horror stories. But one of the things that I found was really great and a real plus during this experience was just working with really great, honest sellers that were really transparent. You know, I feel like oftentimes deals blow up for a variety of reasons. Many times it's because the seller wasn't disclosing something until the 11th hour. But fortunately, the sellers were just really honest and transparent. And I think we had a really nice relationship during the process.
Yeah, I mean, that will likely mitigate anything that you bring up in my next question, but any surprises, whether they're to the upside and benefit to you as a buyer or negative, that you might want to talk about post-transaction?
Yeah, I think not a whole lot of surprises. I think I had a pretty good idea of what I was getting into. Fortunately, no things that were really a major disruption afterwards. A couple of the challenges have just been, it was a fairly lean team and lean staff, and a lot of the functions that the two owners were providing, when they retired, we ended up having to fill some of those roles. And so that means bringing additional people onto the team and growing, and sometimes that can just create, you know, tension as you grow a business and you have new people coming on board.
You're a year and a half in, things are tracking, it sounds like, which I'm thrilled to hear. What were some of the things that during your diligence period you said, boy, this might really create some value in this small business for the employees, for my shareholders, for myself, for our customers, and sort of if there are 2 or 3 of those things that you identified, how have they played out in the early days, in the first year and a half?
Well, I would say one of the things that was most intriguing to me about this business is we have a really large industry and a large opportunity. We've got a lot of, a massive generation of baby boomers coming to their retirement that need help planning for that. And it really just felt like one of the things that was missing in the business was a real energy to grow, right? And the two owners themselves had been very happy with the way things were. They weren't trying to push on the gas. They hadn't invested. There was no hired salespeople at the company. So I just felt like if anything that I could really bring to the table is bring some fresh energy and sales and marketing to the business, and really help continue doing what we're doing. So I'd say that's one. Then 2 would be bring some technology to the business. So it's a very paper-based business. We push a lot of paper in the office. So thinking about ways we can leverage technology to our advantage to scale.
Yeah, so let's touch on those 2 things real quick. So the first one, I love the introduction of a breath of fresh air, some heart and hustle, some new thinking into the system. I'm sure it was a benefit. Was that ever a challenge in the early days? Because that can sort of go one of 2 ways. There are probably people that got accustomed to the way of doing things, and there are probably people that were very embracing of sort of the new ideas and the new style and challenging and that environment. How did that go for you?
Yeah, it's anytime you've got an existing team of people that have been doing everything that they've been doing for many years and have been very comfortable with the way they're doing it. Anytime you bring new energy and new vigor into the equation and new people, there's going to be some growth challenges, right? And a lot of it's just a culture question of how do we have what type of culture are we creating? What types of metrics are we going to measure towards? So I'd say those are all been things that we've been thinking a lot about over the last 6 months.
Sure, I'm sure of it. You mentioned systems and technology and some of the things that you're doing from sort of a process and procedures standpoint in the business. Can you give us an example or two?
Yeah, so I'd say it's, for the most part, like I said, it's a very paper-based business. There's two different aspects to this. One is just the internal technology that we need to drive our business. And then the second is what's the technology that we use to help our customers be successful. So I'd say over the first year is really just thinking about getting the right technology in-house, making sure we've got all the systems in place. Fortunately, we had a really great chief technology officer that the owners had brought on just a few years before. It's been fantastic to work with. Has a lot of great energy of things that he's been wanting to do, but the prior owners have been a little bit hesitant to do.
Sure.
So fortunately able to let him run, it's been fantastic.
That's great, yeah.
Yep.
Now I realize that there are probably no typical days in the life of John Shoaf right now, but if you were to, I think many of our viewers and listeners would love to understand sort of what a typical day in the life of a CEO of a small business, a year and a half into it, what does it look like?
Yeah, it's funny, literally on the flight on the way over here, I was just trying to think of how can I organize my time and be more efficient? And I started making a list of all the different things that I've been working on over the last 2 weeks. And I think I literally went through 2 different pages of things that I'm working on. So I wish I could say there's a typical day, but I think it's, especially in a lean team, end up wearing a lot of hats. And I think that's where I spend a lot of my time is recruiting. And it's trying to find good people that I can bring onto the team that are going to share that values and the culture that we want to build, and also be able to train them and get them up to speed and put the new systems and processes in place. So it's a little bit of everything.
Yeah, sure. And with that long to-do list and list of priorities, how do you stay organized? I mean, do you have any tips or tricks that you've found are particularly helpful when trying to organize your day or structure your week or month? Or how might you think about that as a first-time CEO coming in with this 2-page list that you probably jotted down in about 10 minutes?
Well, I'd say first is, it's one of the exercises I've been going through myself. Just thinking about what are the chunks of time throughout the day that I want to spend. And I'd say first priority that I always default to is just helping my team, right? And it's having that time to spend with individual people that need help and training, and trying to block out regular sets of time that I can do that. We tried to set up a regular, Monday, Friday, quick team sync up schedule. And then I'd say second would be on recruiting and bring more people on board. That tends to be a large chunk of it. And then I'd say third is sort of just all the other things that end up having to fill it.
Sure.
But really trying to prioritize and finding the things that are going to create the most value for the business.
That's great. That's great. Again, year and a half in, probably a long runway ahead for the business. It sounds like there's some exciting things going on. What does the future hold for you and FMT? Without being overly specific, we don't care to have anything confidential, but how do you think about sort of the longer term vision and strategy for you in this business?
Well, I'd say we've got a really big opportunity. I think we've got a great team and we've got a good market and good customers. And I think the market's really ours to develop. So I'd say the main focus is just continuing to grow. We do want to grow at a much quicker pace than the company had in the past. So that'll mean a lot of new people and new technology and new markets and new products. But I think we're well aligned to grow a good business.
Sure, great. It sounds like it. Final question. The would-be searchers out there that are contemplating following a search fund path, or maybe someone who's searching and they're feeling like they're getting close on an opportunity, any pieces of advice or words of wisdom that you'd share with them as a newly minted CEO?
Yeah. Well, I guess depending on the phase that they're in and the advice that they need. But I'd say somebody who's just about to step into the process, maybe they've got a deal that they're currently working on. I'd say one is just think really clearly about what you want to get out of the experience, and really find a way to align yourself with people that can help. Right? And that's going to be people on your team. It's going to be a board that's going to be helpful. It's going to be other advisors and mentors. Fortunately, there's a community of people that have sort of gone down similar paths that are offer and willing to help. So I'd say leveraging those people that can help you be successful.
John Shove, thank you so much for joining us. John Shove, CEO of FMT. We're honored to have him here with us, reporting from actually the Booth Kellogg Entrepreneurship Through Acquisition annual conference, the 3rd annual. So thank you for taking time out of your busy day today. And thank you all for joining this edition of the Entrepreneurship Through Acquisition podcast, brought to you by the University of Chicago Booth School of Business and the Polsky Center for Entrepreneurship.